This is the Stock Trading Reality Podcast, episode 124.
And I think that's why people like message boards is you can find those like-minded people in your situation that make you feel better about what are honestly the mistakes you're making in the market right now.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. He almost had to deliver his fourth child all by himself. Play Trader.
Yeah, it finally happened. It just took till kid number 4, which I guess kind of makes sense why that sort of happens. But the Hollywood situation in terms of, labor and delivery and all that. But with our fourth kid, my wife Abby, who is just, she's a beast. Her pain tolerance is way off the chart compared to mine. She's just like, okay, yeah, I recognize labor. My water broke, blah, blah, blah. So instead of going to the hospital and having to wait in triage, I'm just going to, we'll just chill out there here so that when we get to the hospital, we don't have to, it'll be a little quicker. And so that's what we did. We called up some friends and, eventually, her sister came over. But things got a little hairy in terms of the progression of pain. For me, I'm thinking, okay, I have experience with 3. And she seems to be like kind of acting like she did in like the delivery room, like getting pretty close to when this kid was going to be coming. But I was like, all right, she's this is her 4th one. She knows her body better than I do. And point here, it was rough when her sister pulled up in the car. This was at like 4:00 in the morning. She was hunched over, and I'm having a rubber lower back before, and it was rough. The one nice thing we had was because it was in the middle of the night, every single light was still just flashing yellow. So it was pretty much a straight shot to the hospital. And let's see if I can remember these numbers. So we got to the hospital at 5:31. And our daughter Faye was born at 5:47 or 4:46. Something crazy like that.
Cutting it close.
Had some
cutting
lights
it a
been
little
red.
close there.
Had we waited like another 5-ish, 10-ish minutes, I would have had to like pull over the car and catch the baby as it came out. And that's so in hindsight now, Abby and I, we kind of laugh about it and we're just like, holy smokes, that was close. And I don't do well with blood. I don't do well with hospitals. So that could have gotten interesting for sure. Isn't that a pretty crazy story, Ches?
Yeah, that's trust me, I'm a big fan of efficiency, but I'm definitely going to say you're cutting it close. You almost had a roadside birth there, and then to top it off with the blood and stuff like that, you would have probably passed out and hit your head, and then the ambulance would have had to come anyways because you'd be the one in trouble. But yeah, definitely cutting it a little close.
Our daughter would have had to help me right out of the womb. Oh, great, my dad's already passed out. Let me. So, but yeah, so word to the wise, just from experience. I'm not saying I should not probably be giving advice to pregnant women, but I don't think you can really go to the hospital too soon. Worst case is you just have to sit down in triage for a while and wait until the nurses say it's okay to go up to the delivery rooms. But yeah, we cut it close for sure, and that could have been, we probably should have just waited. That way the fun fact would have been that much more intense. But I don't think Abby would have been okay with, hey, babe. Can you just like wait another 20 minutes so I can deliver this child on the side of the road so I can get a good fun fact for the podcast? I don't think she would have been on board with that. So
yeah, I don't think that would have flew that well with her at all.
Yeah, I don't think. I think we're probably both right in our assumptions there, Ches. But anyways, let's get to what matters and not talking. This is not a birth podcast, but we have an awesome guest, and I say that every week, and I mean it every week. But in this case, our guest Eric, he goes by Gman in the chat room. He's got a sarcastic sense of humor, as we learn about right out of the gates, but I like a little sarcasm every now and then. However, the overarching, and I definitely want, Ches, your quick thoughts before we get to the interview, but his overarching, journey and where he started to where he wasn't that pretty? I mean, it was awe-inspiring to me to see how he used to view things, and then you just listening to him explain points, and he really has come full circle.
Yeah, and I know we have a lot of stories about people as they progress through trading, but Eric just did an absolutely fantastic job of really kind of getting into the nitty-gritty details at a personal level that I think a lot of people, after you've experienced it, in my opinion, it's harder to recollect and really kind of explain it, but he did a fantastic job.
Yeah, it's really a great interview. Instead of just talking about how great it is, let's just hear from Eric. Eric, welcome to the show. How are you doing?
I'm wonderful. Thanks for having me.
Yeah, thank you for putting up with us and our little technical difficulties there. So as we talked about in the intro, you go by Gman in the chat room. Now, do you hang out in the chat room very often? Because if I'm being honest, maybe I've seen you in there, but I wouldn't call you a regular that's always in the chat room. So do you hang out in there much? Or I guess update us on your chat room status.
No, I've been with CTU for probably about 2 years now. But no, I don't hang out in the chat room much. Ches and I talked about this. I met Ches at the Colorado meetup.
Oh, you're a Colorado guy.
Yeah.
All right. Okay. Awesome.
I've been waiting for the main meetup to come to Denver, but that still hasn't happened yet.
We're not going down that rabbit hole right now.
We already got an August one in the plans here, but we'll figure it out. Someday Clay will come west of the Mississippi.
Yeah, there's some other irons in the fire, but you never say never is kind of my policy. Okay, cool. So, because I remember Ches, when he got back from that original Colorado meetup, he was like, hey, I got somebody that's willing to be on the podcast. So you're that guy, clearly. So perfect.
Yeah, that's me. So I don't spend much time in the chat room, really. I went in a few times way back when, and I think as other guests have said, it wasn't a super welcoming chat room. Not that people are unfriendly, but it's just very serious, and you'd pop in and say hi, how's it going, and nobody would respond to you, and I think I just didn't go. And I was going to tell you, I've been in a little bit more lately since the meetup, and the other day you were on, somebody said hi and you said hi to them, and I immediately said, hey, how's everybody doing? And you never responded to my hello. So
yeah, that's because I just don't like you. No, odds are this is what happened, and this was in the morning time, right?
Probably, yeah.
Yeah. So I just happened to be looking at the chat room at that time, so I said, "Oh, hey," and then you saw that and said hi. But in that 2-second window, I probably turned to answer an email, or who knows what was going on, but something else popped up. So
he's too busy for us small guys, Eric. Don't worry about it.
So it's just I'm just, I don't really like any. No, I'm kidding. So I don't take it personally. I get it's really just a matter of timing for the hellos. But yes, I do. I will say, Ches, I think that's a good compliment that the chat room was very serious. I would take that as a good thing. Would you agree, Ches?
Yeah, I do. It's just we deal with a lot of different kinds of people that join, but me and Eric were actually talking about this at the meetup, that we have to sometimes watch out for people dogpiling. So besides that, we're very protective of the environment that you've built.
Yeah. And not that this was your intention, but especially in the world of stocks, there can always be some people that think, oh, good, here's another tool I can use for my pumping up of stocks before I dump them on people. Again, I'm not saying that was ever your intention, but that's just why, to piggyback off of Chez's point, you just got to be aware of things. So for you out there listening that may be thinking, oh, wow, $99 for a year, that's going to be a great tool that I can use to pump up my stocks to these people, you're probably not going to like the community, because we're onto that real quick for them. So where did all this start for you, though? Let's start back at the beginning. How did you hear about the market? And, kind of what got you interested enough to want to get more hands-on with it?
Yeah, and real quick, I crack a lot of jokes. I'm kind of a smart aleck, so just so you know, I'm just giving you a hard time about that. But one of the other reasons with chat, and Ches and I talked about this too, is you guys you have a lot of terms that you guys use, and it is serious, and I think that can be intimidating. Whether or not I'm going to use the right term when I'm talking about a stock, if I'm going to put something in there. So it wasn't just that people are friendly, because I've spent plenty of time in there, and everyone is very friendly. I want to make that clear. I think it just can be a little intimidating with some of the terms sometimes, and am I going to write it out there the proper way, where it's going to be accepted and not looked at differently. So just to clarify that, I'm just giving you a hard time too, Clay.
But we're
Chaz
exactly.
Will give me a hug later. I'll get over it.
No, you'll have to get that from Nate. But how exactly did you even get interested in the market? Was this a while ago or just recently?
Yeah, so I started. I traded originally way back in probably '99. I worked with a guy who did a lot with the stock market, and I was probably 18, 19 at the time, and he just kept trying to get me into it. And so I opened an E-Trade account and, I don't know, threw like $1,000 in it. And, that's still, I'd look in the papers to look at stock quotes and stuff at that time. But, it faded pretty quick. I think I enjoyed the market, but just didn't really have the money to do it. And there wasn't a lot of education, I don't think, back then. So left it alone. In the mid 2000s, I did some real estate. And then in 2010, actually, I started sports betting. I always like to do something on the side. And I sports bet for about 2.5 years. And, it was ups and downs. And I just got to thinking again and looking at the market. And I was like, man, when I sports bet, it's all or none. And, at least with the stock market, I can control my money. And, if I put 1,000 into it and it goes against me, I can sell out and walk away with 900, where if I'm betting on a game, it's either you win or you lose. That's it. And, so I just thought, let me look into a little bit more. And so then I started getting into it probably back in 2012-ish again, roughly. 2012, early 2013. And just jumped in it then and been doing it ever since. Off and on. I have a full-time job, so but I kind of work a different schedule. I work 4 days on, 4 days off, so it allows me a lot of flexibility to be able to trade. So I still get in. I shoot for probably at least like 5 to 10 trades a week, probably is what I look for.
Yeah, very cool. And I want to spin back a little bit because I know some of you newer listeners out there might be interested in binary options because they're pitched as this great thing, but it's totally exactly the same as Eric just said in the terms of it's all or nothing. Whereas when you trade, instead of putting 1,000 in and, walking away with 0 or another 1,000, you can literally, walk away with 900, still close the loss much sooner. But I just wanted to make that analogy because we have a lot of people who have asked us about kind of binary options and they want to trade them because they just seem so safe. And I'm like, well, you're not, there's not really much to manage in terms of your risk and stuff like that. So, but yeah, I just wanted to spin back that way. But so I want to kind of turn it around to, so you get back interested in the market. I guess what particular stocks are you even looking at that point? Are you looking at kind of big caps, names that are, flashing across CNBC? You're looking at small caps, penny stocks? What actually kind of piqued your interest when you came back to it?
No, I am the classic penny day trader investor. iHub is where I started out. That's actually, that's where I found Clay at, was on iHub. You're gonna make $1 million in this penny stock, and that's really where I started. Nothing, because I probably started with $1,000, $2,000 account. So the appeal of a 000 stock and what it could do when it gets to $1, is going to allow me to retire. That really appealed to me at the time. Obviously, looking back, that is a very bad course of action if you're going to be a trader.
I'm with you. I still remember, and I've said this before, but in college, I literally sat down with my wife and was just, I can't believe I'm getting this degree. I'm in this, this muffler company, and this thing's going to like dollars. Like everybody on this message board says it's going to dollars. So I can't believe that I spent all this time. It was a bad. So you are not alone by any stretch of the imagination. Out of curiosity though, so how did you find, I understand why you chose penny stocks, because the allure of the big gains, but how did you even come about them in the first place? Was it just from like a Google search, or what actually led you to the world of penny stocks?
Yeah, it's probably just a Google search. Honestly, I don't remember exactly what it was, but I'm sure I just went to Google and started looking at, all these guys and newsletters, and chat rooms start coming up about, follow me, we just made 1,000% today, and we just made, X percent. And, I probably just got in with one of those, and then somehow, I ended up on iHub. And, you talk about your muffler company. Mine was a stock, TCPS. I don't remember what the name of it was, but that was the ticker. And, I had bought into this, and they had supposedly some patent on some like 5G LTE technology that all the main cell phone companies were going to go after. And, that was the spiel. And I remember, talking to my aunt and uncle and telling them they need to put some money in this thing and just wait until, they get everything figured out and this patent gets out there. We're all going to be millionaires. And I would sit at my computer. This was like a 0005 stock, whatever it was. And, but I'd sit at my computer during the day like I'm day trading, and this thing would trade like, one trade throughout the day. And I did that for weeks and months until I just, basically lost everything in it and realized it was a scam.
Okay, so this was literally... Now, when you bought in, I'm assuming there was more than just one trade happening every day, or
yeah.
I guess, how did you even come about this stock? Was it from one of these newsletters, or was it from Investors Hub itself? But walk us through the actual quote-unquote due diligence process that led you to find this stock.
This one probably a newsletter. I saw it, probably in some email. I don't exactly remember how I got onto it, but, and it was definitely a pump and dump, and I bought right in on the pump. And, at that point for due diligence, I just got on iHub and reading all the comments there in their little section at the top of the screen. And, these guys would send out links to patents that, and as a new guy, I don't know how to read those documents, those patent documents and what they exactly mean. But, it looks really cool and I feel important when I'm reading those documents and so what's not to believe about it? And so pretty much iHub, and then you just, these comments that come in on iHub from these guys that pumped it up, and obviously it dumped after that, but then you keep going back, and a lot of these same people they keep pumping, or there's 3-4 guys that stay in the chat room, in that room at least, like on this one, and just kept pumping it, and just kind of kept the fire stoked, even though the stock price just continued to drop and went stagnant. But pretty much my due diligence would have been iHub at the time.
And okay, but yeah, the penny stock stuff, Clay, I want you to weigh in on this too. It's all about the story, isn't it? It's always about the story, because if anybody ever looks in to the fundamentals of the company, usually it looks like it's pretty crummy. $50 cash on hand.
Yeah, no, exactly. And what really stuck out to me and just kind of dawned on me is you're looking at this patent stuff. You're not like a patent attorney, so you don't really know what you're looking at, but you feel cool looking at it. And just like you feel cool because you own, I'm sure, hundreds of thousands of shares if this was a 000 stock or whatever. But the point here being, you don't know what you're looking at. So were you kind of reading what other people had to say about the patent, because you obviously, like you admitted, didn't really know what you were looking at? So were you reading other people's posts?
Oh, exactly. Some guy would come on and say, oh, did you see this patent? It's, they filed it this date. It takes 180 days for this to get through, and that's what we're waiting on. And yeah, and you just believe this guy. I mean, because nobody would lie to me. It's the internet. Why wouldn't you listen to him? And he sounds like he knows what he's talking about. And obviously, 4 years down the road, 3, 4, whatever it is now, looking back, every red flag in the world would go up if that stock came across my screen right now, or some of those posts. I think if you read, stock twits today, or I haven't been on iHub in a long time, but it's the same thing on stock twits when you listen to these people. It's a 10-cent stock and they're talking about how it's going to be $3 next week, and you're just going, oh wow, does anybody believe you?
And that's a perfect point. And this just encompasses everything about when you don't understand what you're really looking at, whether that's because all you guys talk about is charts. Fine, we won't use a chart as an example here, but here Eric is using a patent as his kind of driving force, but he's dependent on other people to tell him all the details about the patent, and I don't know, patent. I guess I just emphasize certain words. Anyways, he's putting all his driving force behind this patent, and he's dependent on other people to tell him what to do. Just like, that's why Ches and I always say, well, you can't depend on other people to tell you how to read the chart, how to use the chart to manage something, blah, blah, blah about charts. Well, the same exact thing here, because like Eric now realizes, who knows if these people are even, and I love the quote, nobody would lie to me on the internet. I mean, these people on this random, message board, they're not going to lie to me. It's just such a dangerous thing. And I love to hear the kind of in retrospect now about how you now look at stock twits and you shake your head like, are these people serious? Would anybody actually believe them? But the funny part is, you and I, we did believe them when we were first getting started. So if you're listening to this, Eric is tossing out some great stuff here in terms of what's not really a logical approach. If you're dependent on somebody to tell you what a chart says, or dependent on somebody to tell you what a piece of, a filing or a patent represents, that's a very risky thing to go down, because it didn't turn out well, right? And you mentioned
No.
you just continue to watch that trade, or the investment over and over again. So how long did this actually go on where your money was tied up in this thing?
Oh, I'll bet you TCPS went for, I'll bet you like 6 to 9 months at least. I just rode that train. Yeah, I can't believe how much of my life I wasted on that stock.
It's all part of the journey, and obviously when you kind of went into it, it got to wait 180 days for all the stuff to come to fruition and stuff. So I'm sure that kind of played into it too. But obviously after that trade, it sounds pretty clear that you had recognized this is probably not the market you want to trade. Did you kind of give up on trading after that whole thing for a little while, or did you say, I'm going to look for, more volume movers, or I'm going to shorten my time frame? What exactly is your outlook on trading after that kind of quote unquote investment goes poorly?
I always enjoy a challenge, so no, I didn't leave the small penny market right away. I think I after a little while I uploaded my, reloaded some money into my account, and honestly just continued to trade in the triple zeros, or probably anything less than a dime. Really, I didn't go much above that. Again, $1,000, $2,000 account, it looks great when you can have 500,000 shares in your account, and versus hey, if it's $1 stock, I can only buy 100 shares. And, it's before you realize that percentages are what matter most when you're talking gains. Doesn't matter how much or what price the stock is. But there's another stock, FIDX was really the next one. And that one's always sat with me most. That was a marijuana stock. I think it's still around. I'm not sure. But right in the boom at the end of 13, 14, they're up in Canada, and same thing. I was on iHub. All my due diligence was done on iHub and what those guys were posting. And some guy lived in Canada, and he would go stop by the company and give a report of what he's talked to them about, and take pictures of where they were going to build their warehouse. And anyways, that stock sticks to me because it's one where I bought in, and I don't remember exactly, but probably around a penny, 2 pennies, and then the boom happened, and that thing was up. I forget where it went to, but I was up about 17,000. And this is on I think I had 4,000 in my account, and I was up $17,000 that day. And my wife was actually next to me, and we're watching it, and we're just, like, you're getting excited, and this thing's never going to stop going, right? So finally I start to get the feeling as you see it top off and start to pull back. Well, maybe it'll go. I'll hold a little longer. Finally I put my sell order in. And by the time I got to the door, because everybody ran to the same door, that 17 grand I walked away with, I want to say it was 7,000. And I literally, as I was waiting for my sell order to fill, I just watched my P&L just drop and drop and drop and drop. And that for me was really the one that made me make a change and reevaluate what I was doing.
That's a great story. That's wow. Congrats on the 7,000, and also bigger congrats to you recognizing, because a lot of people, Ches knows, veteran traders know that the voices in our head can be very tricky. So the voices could have easily said, Eric, great job, 7 grand profit, on to the next one. But that's not what happened. But just to go a little bit previous to this, that first TCPS, that one was just a disaster. Do you remember kind of a general sense? And really up until the point of the one where you up 17,000, when you would take losses and such, was it your fault? Was it the company's fault? Was it Basher's fault? Do you remember who exactly you were kind of casting the blame on for whose fault it was at that point? And then also why you just kept at it when, you really didn't know what you were doing?
That's a loaded question. I think it's always, especially in that world, it's always the moneymaker's fault. That's first and foremost. I think then followed by the shorts. There's no doubt that a lot of people short 000 stocks. And I'm completely joking on that, but
okay, I'm not.
We were all waiting on the edge of our seats there.
To Ches in Skype, like I was getting ready to say, is he trolling right now, or is he? Because you said you had a personality, but I'm like, okay, this could be a first. But well played. You had. I wasn't sure, so I wanted to get Ches's input on it, but. Okay,
yeah, no,
good. So listeners, you're fully joking, right? You don't
fully,
actually believe
fully
that.
joking there. It's I'm not to say that stocks don't get manipulated because I think they do. I don't fully understand how, but
Well, I'll tell you
way
how
people,
right now. Go find a stock like the TCPS that trades like what has one trade a day, so basically no volume. Go and buy $5,000 worth of that stock, and you're going to manipulate the price because the price is going to go skyrocketing up. Anybody
True.
can manipulate a scalp, so there's no doubt about that. They can be manipulated. Now, of course, the message boards would light up, oh, there's some sort of Russian hedge fund that knows something, so they're loading the boat. When all it is Eric just deciding to buy $5,000 worth of stock. So, I mean, things will get twisted. But, yeah, and stocks can be manipulated, and you could do it right now. You just got to find the right stock. No, it's not a coincidence why a lot of people like those low-float stocks. Pumpers love low floats because they're easy to manipulate and, fleece sheep on. So... but yeah, manipulation definitely does happen.
Definitely. I think now you can do that, after hours trading, especially now, because I definitely do some after hours, but, one guy buys a share, sells a share at, the 20-cent difference and it makes the price, skews it, but it's one share, and you see that. I guess I was referring to the way on the message board specifically, these guys always say, oh, the market makers they're holding it down on purpose because they're trying to get more shares, and they're not doing that on these small penny stocks, and there are no shorters. It's looking back, that's what I blamed it on, the same as all of my the people doing the same thing in iHub and in the same position as I am. I think you're justifying any reason to stay in the stock and make it sound good, and then I think you do that every time that stock goes lower. I think it'll take a drop and find an area of support for a period of time, maybe a day, and you're like, oh, okay, I can accept that loss. That's not bad. But then the next day comes out and it pulls back again another, say 10%. And then you don't sell and you just get more comfortable and you just continue to justify reasons to stay in it. And I think that's what you do with iHub. And I think that's why people like message boards is you can find those like-minded people in your situation that make you feel better about what are honestly the mistakes you're making in the market right now. And to answer your other question real quick, I think these guys are good in these newsletters and on the internet and in Twitter and in iHub. At the time it was iHub and StockTwits. And so for me, I think I kept going because this one got away from me, but that happens. I got stuck. I was that guy that didn't get out. But look at all these other guys. They're still making 1,000% here and 1,000% there. All I need is to go on and try for that next one. And I think that's what you do is you get in that mentality of the next one is going to be the one. And that's why I kept going at the time the way I did.
These are epic answers. Epic. I mean, Chez, this is good stuff. I mean, especially about his previous comment where that's why message boards are important. You find like-minded people. And pretty much it's a pity party for everybody, but the pity party, just justifies what Eric said is just a mistake. It's a mistake, but the like-minded people comfort you. I mean, this is good stuff, Chaz. Hopefully newer traders are listening.
Yep, definitely. And regarding, the shorts holding it down, you actually put out a great video about kind of the margin requirements of shorting these penny stocks. So I'll definitely throw that in the show notes for those of you who are unaware of the 250 rule.
Yeah, and kind of circling back now, fast forwarding. So first off, major props to you for admitting that, I was not blaming the person in the mirror. I was looking to blame anybody but myself. It just got away from me, but I'll get the next one. And then all of a sudden, was it the ticker symbol, was that FITX?
Yes.
Okay, yes, I definitely remember that, and that one was a monster for sure. So FITX happens, 17,000 down to 7. So what really just strikes me is you still made $7,000 on it. Yet this was the time where the light bulb went off and you said, I needed a change. So, I mean, what caused the, if you can pinpoint it, what exactly caused that psychological kind of light bulb to go off? And then what change did you decide you needed to make? What path did you then start to, go down?
Man, it's a loaded question. And, to try to, I love the psychology of trading, and there's a book I'll talk about a little later. I think that everybody in Clay's world would enjoy. But I think it's about understanding maybe why you trade as you step back. And I think for me, I think you have to spend a lot of time in the market and experiencing all of the emotional highs and lows, in that FedEx trade going up 17, back down to 7. But, that whole day, I still remember that day, and the amount of emotions that I felt from through the roof ecstatic to my heart dropping out as I'm watching the stock tick down because I can't sell it. I think it's a long road to understand those emotions, and I think it's a lot of small steps to get to where I am today. And then I have a wife, I have 2 kids now, and I think as I've had my kids, which, my oldest is 4, so, a little before we got pregnant 5 years ago, so that would have been around, probably she would have been just getting close to having them probably at that point. So I think, my mind changes there, and you're going, okay, I'm looking to set up futures now. I'm looking to take care of my kids and maybe make this a career someday if it works out. And then you realize, I think for me, that it's not going to work. There's too much risk involved in a trade like that. And I think the specific risk was being able to get out of a stock like that. And I think now I definitely trade a little bit higher priced stocks, above $1 most of the time, and a lot of high volatility, because you never have to worry. I press sell and I'm out 3 seconds later or less, and I think that watching that stock not be able to sell really put some fear into me. And after that, I think I took that 7, and I don't remember exact tickers, but I pretty much lost most all of that 7 back into the market, trying to find my next FedEx, basically, and just loser after loser after loser, and even if you cut your losses, if you're continuing throwing your money out there at a pump and dump, specifically in that world, and you're buying the top on a lot of these, you're selling for a $300 loss or a $500 loss, and you do 4 or 5 of those, and all of a sudden your account is half of what it was, and so I think I took a break after that then too, and didn't really trade much for probably at least a good 6-month period. I'd maybe do just a trade here or there as I kind of reevaluated and looked at what I was going to do, and that's probably about the time when I joined you, Clay, because I want to say I joined in I want to say I found you maybe in mid 2014. I don't think I joined CTU till 2015, but I joined the chat room previous to that. Then just kind of started following you on iHub and watching your videos and stuff. And so I think I just began to evaluate what I was doing and why I was doing it at that point.
Yeah, and the liquidity issue is it's obviously a huge thing, and I totally agree with you in the sense of, these are things that, especially if you're newer to the market, you're not really thinking of. You're more so looking at your potential gains instead of looking at what are the potential losses. And, when liquidity is light and a lot of these, very, very, micro penny type stocks, it's the spread can be absolutely huge. And, even if you get in at a great price, you might, if you're lucky, be able to sell for break even. But obviously it sounds like your quest for finding, the winning lottery ticket eventually did come to an end. And it sounds like now you still, and correct me if I'm wrong, I remember this from when we met in Colorado, you still focus mainly on small cap stocks, but you're trading stocks that have like tons of volume going through them, right?
Correct. Yeah, I would, now I would definitely be a trend trader. I probably, I'll trade ETFs as well, which, those can be a little bit higher price. But most of what I trade now is probably between 75 cents to $10. Probably the majority of that is between $1 to the $5 stocks in those small caps. And I was going to say, too, on your point, for me, something that it took me a while to realize when it comes to, and I said volatility, but meant liquidity earlier, but is understanding the level 2 and the difference between the bid and ask. And, because you see these guys go, yeah, the stock hit 30 cents today. You could have sold out and, you bought at 25, stock hit 30, you could have made a nickel. That's true if you were selling on the ask, and they hit your 30 cents. But then you look at the chart and you look at what happened, and one trade went off at 30 cents, and the rest of it went at 29, and the bid never got above 28. So to step back and say realistically what would happen, I'd be lucky to get my 28s from 25. And I think it takes a minute, especially new traders. You have to pay attention to that what is the bid? What could I realistically get out at versus, what was the high of the day on the chart? And I think that's what a lot of these newsletters do is they take, you could have made 1,000% if you would have sold at this. But in reality, the way that stock traded that day, there was only 300% of, possible or eligible gains for you to have made the way that stock actually traded that day.
Keep talking. That's really all I can say, because the only nitpick I have is you use the word think. You think that's how newsletters do it. No, that is exactly how they do it. They 100% assume the best case scenario, and then they throw out their percentages to just get more people to sign up for the newsletter. So, absolutely nailed it. For you listeners, if you kind of zoned out or if you just didn't quite rewind, that's exactly how the game is played and why level 2s and liquidity and all that stuff is so important. He summarized it perfectly, and you've made some progress. I will tell you that from the way you described things way back to your stupid, decision, and now what you're, realizing and explaining. Ches, would you agree he's made a whole boatload of progress?
Right, but and for the newer listeners, though, you got to take into context that this was over a good span of time. This did not happen for Eric overnight to kind of realize this stuff. So, and I hope everyone listening kind of takes this stuff to heart, that you can avoid these pitfalls. That's really part of the point of the podcast, is to say, here's where I was stumbling and here's what I'm doing to fix it. So, Eric, is it safe to say that you have learned a ton? Because obviously we as outsiders have totally agree that you have kind of made huge strides in how you used to trade compared to what you're looking for now.
Yeah, I feel today, right now, I feel great. These past few months especially, I added it up and made some notes so I can hopefully impress Clay on my podcast today about different things I want to talk about. But
I'll even if you say you've lost $10,000, I'll probably say I'm impressed, because I still feel bad about not saying hi to you. So I'll be impressed no matter what.
But the month of June so far, which is one of my best months, as a whole, right now I am 11 for. I am 11 for 14 green trades for basically 3,900 for the month of June. So, and the losses that I took, one was a 400, one was a 265, and one was a 90. So, yeah, I think I've come a long way. I feel great. In the same breath, though, I have so much further to go. I think in this world, it's a never-ending process of looking at yourself. And, one of the things that drew me to you, Clay, is the talk about, trade without emotions and controlling your emotions. And because I think you realize after a period, it took me a little while, obviously, but, I'm trading against myself most of the time. Because I'll tell you, almost every stock that I buy into, it goes up. I'm green at some point in every stock I think I've ever bought. But I always hold it until it goes red. That's what I used to always do. And so I'm trading more against myself. So I think it's going to be a never-ending battle to continue to try to understand who I am as a trader. But again, to reiterate what Ches said, like it's taken me a good 4 years now of consistently sticking with trades. And, I joked earlier that I wasted a lot of my life looking at TCPS and staring at it doing nothing on the screen. But looking back, that was all part of this journey. That's all made up who I am today. So I wouldn't change that. And I spent time, watching level 2s, and I was, reading this and reading that and watching this video at the time and just growing. And like I said, I've been fortunate enough to, I have a pretty good job and my schedule allows me to trade. So, I've had a lot of ups and downs, but I've been able to add money back into my account and get back into the trading world, and then even if I lose it, I can get back into it after a period of time. And I feel like I've done some self-evaluation. So it's been a roller coaster ride, but it's been 4 years and I feel great where I'm at. It's not going to come overnight for anybody. And if it does, it's one of those, and I'm sure people on your podcast have said this. I don't want you to have overnight success for anybody listening. And you don't want you to have overnight success because it's going to set you up for failure. because as quickly as you made that money, it's going to go away in something else. I was trading a stock this week, and I was showing my wife, but it took almost 40 million shares traded to move this stock from basically 31, 32 cents up to 36 to 38. And it took about 1 million shares to drop it from 36 to 31. And I mean, that's the reality of the world we live in, and you want that slow, steady march up.
And yeah, that's, if you don't understand what Eric is implying right now, that's fine. That just implies that you have work to do, you have learning to do, because what he described, yeah, that makes perfect sense. Now, I want to just kind of of course, not, shove courses down people's throats, but to just give a full disclaimer that I'm assuming a lot of this growing has continued to happen even after you bought, Clay Trading University. Point here being, nobody here, you're not saying, Chez and I aren't saying that Clay Trading University, buy it because it's a magic pill and you will automatically get it all figured out. You still have, or walk us through kind of, you bought that and then the growing that still continued to happen, because obviously that's not a magic pill. So what was your experience with that? Did it help make things a little bit more efficient at least, or how did that happen after you introduced some actual structured education into your pathway?
It definitely did, and I will say I've actually been a member of a chat room. I guess you would probably call it a newsletter, but I've been a member there for probably 3-4 years now, and I still am today. And there's a lot of the guys, I've just traded with them for that long. And I know how that room works. I know the guys and how they trade, and I use it to get ideas. And but he had a lot of content on that site that I originally had looked at. And then obviously I bought yours, and I'll tell you, we talked in the beginning. If you've listened to this, I don't go to the chat room much. I haven't done a lot within the Clay Trader world, but there's no better training material than what Clay has out there. I think from the educational perspective, how he teaches it, that's how you teach it, Clay. You make it so simple and easy to understand. For me, and everything that I've seen in my 4 years, and I've looked at a lot of different stuff, I don't believe there's any better materials offered. And I took your courses, and they have given me definitely the best foundation that I could have asked for when it comes to chart reading and understanding, shorting and what's happening on level 2, and different chart patterns, and all of your courses. And I haven't done much with options, but I think your options courses make it very easy to understand options. So it definitely, that your work gave me the foundation for all of the technical knowledge that I have. And I think that's 50% of it. The other 50% is me understanding me as a person and my emotions, and controlling those. Because if I do the things that you teach, and I say that you teach, but you're just showing what's happening, and statistically and historically, this pattern, this is what's going to happen because of the psychology of other traders. I'm going to make money if I get out of my own way.
Well, I appreciate the kind words, and I'm glad you find value in them. But I love the statement that you made about, the courses, they helped me out a lot. And that was probably 50% of it. But the other 50% circles back to the comment but I'm still trading against myself. So that's why, the courses, again, I love and I appreciate the kind words that you enjoyed them, but they're not a magic pill. Nobody's courses are a magic pill. And if they're trying to market them in a way, that's a red flag. So perfectly summarized, because at the end of the day, like Eric says, you still got to trade against yourself. And, Chez, we're talking, behind the scenes here on Skype, and you basically segued perfectly. So Chez, I'll let you take it from here.
Yeah, I was just going to bring that up because it's pretty much exactly what you said. The thing is you can learn how to trade, but you also have to learn, and I would say it is equally as hard, if not harder, to learn, just like Eric said, to literally get out of your way and not let your feelings and not let your emotions and not let your greed and fear take over and just kind of trade the chart. And while you might be listening to this, and especially if you've never traded and you're thinking about getting into the market, say, oh yeah, no problem, I will always be logical. I promise you, the minute you have a single dollar of your money on the line, everything you thought would be calm and relaxing and I'll just trade the chart goes out the window. There's nothing we can even do from like the education standpoint. Don't get me wrong, we're not therapists or anything like that, but that's something that every person as a trader has to overcome. And by no means is one person's route going to be the same as another person's. I personally know this for a fact for myself. I am exactly my biggest enemy, and I micromanage way too much, and I make irrational decisions. But the thing is that over the years now, I recognize these red flags and know that, nope, I'm going to, trust my original trade plan, and this is why, X, Y, Z. But yeah, you took the words right out of my mouth in the sense of getting educated and learning how to read the charts, manage your risk, trade different vehicles. It's easily half the battle, but the other half of the battle is it's a personal journey, and it's going to be different for everybody.
Well,
yeah, well said. And just a question we love to ask is in regards to kind of losses. You listed off some losses, and they were great. I mean, sure, you took losses, but welcome to the club. We're always going to take losses as traders. But when you take a loss now, how do you kind of mentally accept it, mentally, admit defeat? Just basically, what is your current, outlook on losses versus when you were first getting started? How did you view losses back then? So I guess, how has the transformation been? And maybe it's still a work in progress, but walk us through that kind of arch of losses then versus how you now approach losses.
Yeah, I think, and I think this will play in. So I'm just going to, what we were just talking about too, I think your term is, and I don't always know your term, so don't yell Clay, but I'm pretty sure it's a cliff, and that comes back to the psychology, when a stock goes down, and is it a cliff point where, and it's understanding the psychology of people that are trading, that if that breaks, all these traders are going to be staring at their computer going, uh-oh, I'm clicking sell because that was that cliff point, and that's when you see that huge red candle. And so I think that's where charts are important, and psychology plays just as much into that. And I think with losses today, back then I would buy in and the, half the time with the spread, you're just negative already if you buy in at the ask. But, when I would buy in then, it would drop a tick and I would just start sweating already. Oh my goodness, I'm down already. What's going to happen? And I'd panic. And, I think there were times, honestly, where I lost sleep and, I just didn't handle it well. But that's because I didn't know what I was trading. I didn't know how I should be trading. It was all hope and by the seat of my pants and, some guy's comments on iHub. And now when I trade, I know my charts. I'm by no means an expert, but I'm pretty comfortable now with, when I see, like I said, I'm in that other chat room. When I see somebody throw up a ticker, in your room, I see somebody throw up a ticker, I can pull that chart up and take a look real quick. And I can visually analyze and go, okay, that's at an area of support. I like it. If I get in here where it's at right now, I feel comfortable down to this point, and I'm comfortable knowing that, okay, I'm going to buy into this stock at 210, but I've got a double bottom sitting at $2. So maybe I'm buying a little early at 210 right now, but I'm willing to accept that 10-cent move down and not panic and sell my shares. And then I think now it's just knowing in charts, okay, this is my hard stop. This is where I'm getting out if this one pulls back. And, like I said, I do a lot of trend trading now. Predominantly, I do some day trades, but mostly I'm probably overnight holds up to a 2-3 day hold is what I do. So, I know that little gap that buffer zone I'm willing to give it. And beyond that, I get out, and that's my plan. And as long as I follow my plan, I'm happy. I don't lose sleep at all anymore. I feel really comfortable with the picks I make now.
And I mean, it all comes down to you are comfortable with the plan. Your plan does not rely on hope and greed and stuff like that. I see this as an opportunity. This is, where the trade is invalidated and I'm wrong, and I'm going to take my loss and not try to ride out any nonsensical storm or, look for any good articles that kind of reaffirm my original idea. You have a plan, and I love the point that you said, and it's the same for me. I don't lose any sleep at night now with the position because I'm not fearing what will happen to it. It either works or it doesn't, and that's just how trading goes. And like I said, that by no means will ever come overnight, and if it does, you got to beware of the fool's gold, because then it sounds to me like you're probably way overconfident in yourself, especially if you're new. But you kind of touched on...
Before you ask your question, I'll toss it back to you, but I have to just go full circle here. What stuck out to me with Eric's last response is it's not, okay, so I'm in, your chat room, Clay, and I'm in this other chat room, and I see an alert, and then I have to sit there and wait for this person to tell me what the alert means. I have to sit here to tell me, where I should buy. I have to sit here and tell me, or, wait for them to explain where I should sell. Now, he did that with the patent way back when he first got started. He needed help with the patent because he didn't quite know what he was doing, so his plan was definitely being influenced by other people. Fast forward to what he's just saying, and so I see an alert in a chat room, and then from there it was me, I do this, and then I do that, and then me, I decide this, and then I decide that. Talk about pure independence, and why chat rooms, there's nothing wrong with them, assuming you know how to fish, assuming you can do what Eric just did, where you get the alert, and then it's all you. Me, he takes over control, rather than having to depend on other people. So that's just... It almost brought a tear in my eye, Eric, how, the full arch of where you started and needing so much outside help for your decisions. And now it's just, give me an alert and I'm going to make all the decisions from there. So well done. So Ches, sorry to step on your questions, but got my adrenaline flowing. I like to see such progress like that.
Yeah, that's the whole thing. And Clay, we deal with a ton of people in the customer support realm where they say, oh, I bought this and it's completely tanking against me. And the thing I always am tempted to say is, well, did somebody hold a gun to your head and say you can't sell, or did somebody hold a gun to your head and say you have to buy here? That independence is literally being the business owner, the operator, the CEO of your entire trading operation. And having confidence in your ability to do that, that's like the most liberating thing, especially for me personally in trading. I don't have to trade off alerts because I'm capable of, and there's nothing wrong with alerts by any means. I take a look at them all the time. But the thing is that the ability for you to construct your trade plan, and a real old example is that, there was a Google alert. I'm trading options at the time. So was Hooch. I made money on Google going up and he made money on Google going down from the same exact alert. And that just shows we were both capable of making our plans separately. We're both able to kind of manage our risk, and it's great that we both made money, but if one of us lost, I mean, that's just another day in trading. But yeah, I love how much independence and how it's kind of shifted from waiting for this guy to say this is great because of this patent or something like that to look at the alert, look at the chart, it's either for me or it's not, and then moving along. But it kind of ties into this too, as this is what I was originally going to ask is, what exactly are your favorite setups? What are you specifically looking for regarding your entries, or how you even spot these little swing trades that you put on?
And I'll answer that one second. I just wanted to go back and talking about the internet, and you were kind of saying with alerts especially, and we talked a bunch about chat rooms and whatever, but the thing to remember for everybody out there, you never know what people are doing with those alerts and what side they're on. They might be short, they might be long, this might be their retirement account, they might be looking for a day trade. So you have to have your own plan, because you never know what those guys are, what everybody's plan is behind the scenes. You don't know that on the internet, so you have to have your own plan. And I'll just tell you, so to give you an example real quick too, yesterday I traded EKSO. It was a really good mover this morning too, but I saw the ticker come up. Somebody called it out, and anyways, popped to the chart, looked at it, was holding mid 215s, 220 yesterday. So I took a position at 220 yesterday afternoon and moved into the afternoon. It took off. I sold at 242 to lock in my profit. So I locked in $920 yesterday. And then watched it later on into the day as it traded in the 240s, kind of back and forth, and found another area of support. I liked it into the gap over 252, looking at the chart, and it had room to about 275, 280. So before yesterday, I took another position at 242, and then this morning I sold out at 260 is where I got out at. But it had a really nice gap up and got heavy in the high 260s, which was close enough to that next resistance level anyways. So I took my money and got out. And, that's an example of what I did over the last 2 days. For those two trades equaled about 1,700, 1,800 in profit, somewhere in there. But as far as my setups, a lot of, I do sometimes try to find some bios. I like the risk a little bit. I'm not, probably one of my downfalls, I'm not adverse to taking a lot of risk, which you definitely get burned on, so be careful. But a lot of fib retracement plays is what I'm doing, and a lot of plays where you're watching this stock, move up 200-300%, and then I'm looking for that play after day 3 or 4 when you've seen it pull back and begin to consolidate, and you have a lot of shorts in there, and you're looking at the end of the week short squeeze a lot of times on Fridays. That's a lot of what I'm playing, though, is those stocks that have made a huge move, pull back, consolidate, and then look for that secondary move after that when they squeeze shorts.
I like that. So you're looking for those nail biter shorts where they're thinking, oh crap, I probably shouldn't have shorted right there. Oh crap, now it's consolidating. Oh crap, and then here comes Eric ready to help squeeze those shorts with a long-sided trade. I love the psychology behind that setup. That makes perfect sense. What about routines? Looking at the time, we're gonna have to start to wrap things up. But it sounds like you're more of a swing trader. So when exactly is this all taking place at work? I know you mentioned earlier that you have a job that allows you to kind of scan, or you do anything in the mornings or at night, but what's kind of a typical routine for you in terms of, mapping out these trades that you've been taking?
Yeah, honestly, there's no typical routine. One of the things that I use, and I think I think it was Mario is the guy in your chat room, but I have trade ideas. And I am a buyer of their product. I'm grandfathered in from about 1.5 years ago with their AI Holly and stuff, but it's an excellent trading system. Their AI system runs all the algorithms and everything every night, like billions of computations. And their scanners, I personally have found, are phenomenal. They pick up a lot of things very quickly. Someday, like I said, I saw that Mario, he posts the up gappers and down gappers from Trade Ideas in your room, but someday if anyone's interested, I could go over that system with him. But when I'm scanning, that's what I'm using a lot, especially during the day. And their AI system will run its algorithms every day and come out with basically taking a risk on, risk off mode, and it's telling you their strategies, whether they're long strategies or short strategies, and where it sees the market going for the day. So I really love their software. And that's what I use a lot of. And then otherwise, I'll use FinViz to do some of my charting and find some of those plays. And, again, a lot of the plays that I do get into are big name movers. So I'm just kind of getting a feel on StockTwits, Twitter, the room I'm in. Sometimes I'm in your room and just seeing what everybody's talking about. And normally that's more than enough food for me to find something to eat on. So,
yeah. And I mean, the whole thing about the alerts too, especially if you're seeing them across multiple rooms, what in my mind that's always translated to is that there are a lot of people watching it, which means there should be good volume, which means if I see an opportunity that's good, like you said before, spinning back to earlier in the podcast, you click the sell button if things go wrong and you're out in 1 to 3 seconds, whatever it is. You're not worried about getting filled 50% below what the price is because there's no volume. So I can also attest that when I had a Lightspeed account, they actually used to give you a Trade Ideas subscription, and I did use it, especially to kind of sort my basket of stocks I day traded for options. And they've come leaps and bounds from that, especially with their AI stuff. And Clay, I'm not sure, do you use Trade Ideas still, or do you just use the Lightspeed scanner?
Yeah, 2 points before Ches lends you his time machine. First point, Trade Ideas is great. I've used them in the past. I don't use them currently. And we'll put a link in the show notes. Full disclosure, if you do click on that link, we'll get some affiliate dollars back. If you don't want us to get any affiliate dollars, then that's fine. You can just go straight to Trade Ideas on your own. But full disclosure there. But yeah, Trade Ideas is great, and I'm not just saying that because that is an affiliate link. yeah, they're fantastic, and they really do a good job, and they've come a long way. The second point, though, just to differentiate, is Eric mentions that he's on StockTwits and he's on Twitter, and isn't that bad, Clay? Like you're supposed to, like, why is he still following people on? Remember, there's two ways that you can approach social media and chat rooms: as a sheep, or as a wolf, or as a shark, or in other words, somebody that knows what they're doing. Social media, there is nothing wrong with it at all, assuming you're using it the way it should be used. And Eric is using it the way it should be used, just to gauge interest. Notice he didn't say, so then I go to StockTwits and wait for someone to tell me what to buy and at what price. No, he's just using it as a tool. So I want to make that little distinction there. Ches and I, there's nothing wrong at all with social media. It's just how you are using social media. But Ches, the ball is yours. Get out that time machine.
Well, Eric, since you are local, it's definitely easier for me to get the time machine to you. But if you were able to borrow it and go back and give yourself one piece of advice, what would that one piece of advice be? And it's not to buy Microsoft in 1980 or whatever. We have to distinguish that for all the guests from now on.
It's one of those. I mean, my gut answer to that, and it's somewhat cliche, but is that I don't know that I would change anything. Because I think the lessons that I've learned along the way, and it's been a very bumpy, rocky road, but I've survived it, have turned me into the trader I am today. And I think without those lessons, like a TCPS or a FIDX or the thousands of other ones, I don't think I would be the trader I am today. So I don't think that I would change anything. That's my gut answer to that.
Fair enough.
He's going with experience. Yeah, that's a first.
Yeah,
but experience is the thing that teaches you. That's for sure.
Yeah, I mean, this is not a philosophy podcast, but I mean that would be a great rabbit hole to go down. But we don't have time for that. So yeah, I have no problem with that answer at all. It was experience is the greatest teacher. So yeah, good answer. Well, now we're moving into the extra serious questions. And this is where things really, really, your likelihood that I yell at you increases exponentially now. But
hey,
what is your
quick
favorite movie?
Hey, Clay, real quick. I just wanted to plug something real quick because we've been talking a lot about psychology. And there's a book.
Talk about that book for sure.
Yeah, and I can send you the link. It's a free link on the internet to the Adobe PDF of it. It's written by this guy, Anand Sanghavi. I'm probably butchering that name, but I don't know. He's a trader at sanglucci.com. No affiliate. I've never done anything with their website. I just found this book. It's called The Red Pill: The Hard Truths About Trading from a Man Who's Lived Them. And it's a quick 40-page read. You could easily read it in less than 45 minutes. But the examples that he gives in that book, and he talks a lot about the psychology of trading, and one nugget in there, he talks about Malcolm Gladwell, 10,000 hours of doing something to become an expert, and how it's hard to make that apply to the stock market because, if you shoot 10,000 free throws, you're going to be good at shooting free throws, but you can make 10,000 trades, but that doesn't mean your next trade is going to be good. The market is always changing, and it's a really good book for me. It really sunk home a lot of the points he makes on psychology, and I think it's a great read. It's a quick read for everybody out there. So no affiliation. I just think it's an excellent book for psychology of trading and what it's like. I even had my wife read it to kind of understand maybe a little bit of what goes through the mind of a trader a little bit sometimes. So I just want to get that out there.
Yeah, we'll definitely take a look at that. So you could just send that over to my email. But
okay.
Yeah, what exactly is your favorite movie? Because this is when Clay's going to start to yell at you if the answer's wrong.
All right. Well, I'm a movie connoisseur. I love movies, but I'm going to go with my favorite movie is 1 Week.
1 week?
1 Week.
Okay, I'll have to add it to the list. I've never seen it.
Have
you seen 1 week?
It was an indie movie, so I doubt you have, but it has Joshua Jackson in it from like Fringe and. But anyways, the whole premise of the movie, which I don't want
to hear the premise. I want to go into it blind.
All right.
Do you think I would like it?
It's about life. It's definitely philosophical about life a little bit.
Okay, what about food? What do you while you're watching these philosophical movies, what do you like to eat?
I would definitely go with burger and fries. It's my definite go-to.
Oh yeah, it doesn't get any more American than that. I'll take that answer all day long.
I make beer for a living, so.
There you go. That complements it right there. But so what do you do for fun or hobbies outside of the market?
We living in Colorado, got a wife, and then I've got a 4-year-old son, a 2-year-old son, and so they pretty much are my hobbies at this point. But we get out and do a lot of hiking, especially in the summer, snowboarding in the winter, but just a lot of stuff out in nature with the kids especially. Definitely.
That's awesome. And yeah, you're in a great place for it with Colorado. So yeah, that would make sense why you enjoy doing that stuff. You're in the location for it for sure. Final question, 3 words, and these 3 words need to be what you would associate with a successful trader. So what would these 3 words be?
I would say discipline, most people say, focus, and I would say grounded.
Oh, I like that. All 3 are great, but grounded, that's a great way to put it, and summarize things for sure. So, Eric, awesome stuff. And again, for you out there as listeners, his talking points that he went over, I fully endorse them. He made some great points about the newsletters and the psychology of things. Just some great stuff here. So we'll definitely have to have you back, assuming you would come back. So would you come back to the show at some point?
Definitely, and I will definitely try to be in the chat room a little more, and I'm
going to avoid every single hello that you offer up, just so you know that, just so I can hurt your feelings. Whenever you say hi, I'm going to ignore you on purpose. So just if you can handle that, then yes, please come to the chat room.
I can handle that.
Excellent. Well, again, thank you very much for hanging out. Thank you, Ches, as our esteemed co-host. And as we wrap things up, a few final things. First off, if you're listening on YouTube, then check out the rest of the channel, lots of different videos, and click that subscribe button if you like the other content there, but a whole lot of other stuff other than just these podcast interviews. If you're listening at iTunes or any of the other podcast players, make sure to subscribe, and especially on iTunes, if you could take some time to leave us a rating, those really go a long way in helping us out. And finally, if you're listening at claytrader.com on the show notes page, leave us a comment, click that share button. Ches and I do read comments, and we will gladly interact with you if you have any questions or just general observations or whatever. So thank you again to Eric. Thank you, Ches. We will see you back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.